The learner, welcome. You're aiming to get straight to the important stuff right. Quick, thorough, no getting bogged down.
And that's what we do here.
Today, we're diving into International Standard on Auditing 701. Think of it as a key part of the global rulebook for auditors.
Specifically, the bit called Communicating Key Audit Matters in the Independent Auditor's Report.
Yeah, that part, and our source.
We're using excerpts straight from the official ISA 701 standard itself, going right to the horse's mouth, so to speak.
Good stuff. So our mission today is pretty clear.
Right.
Really get what these key audit matters actually are.
And crucially, why flagging them in the auditor's report matters so much.
Especially for you, reading those financial statements, it's like a little peek behind the audit curtain.
It really is.
Okay, let's unpack this. Fundamentally, this standard, ISA 701, it's about transparency, isn't it?
Absolutely. It's about the auditors highlighting what they found to be the most significant things during their work.
The big ticket items from their perspective. Knowing that gives you, the reader, a much better handle on things.
Exactly. So maybe we should start with the scope. Who does ILSA 701 actually apply to?
Okay, yeah. The standard says it applies when auditors are communicating these key audit matters in their report. That's mainly for general-purpose financial statements of listed companies.
So companies on the stock exchange.
Primarily, yes. But it also mentions it can apply if it's otherwise decided or, required by law or regulation.
So it can pop up elsewhere too?
Mm.
And the objective, what's the standard trying to achieve?
The main goal, as ISS 701 puts it, is for the auditor to figure out what the key audit matters are and then communicate them in the report. It's all about boosting the report's value.
Making it more informative, giving users like you, the learner, a better insight into the actual audit.
Right. So we know who it's for and why it's done, but what exactly is a key audit matter?
Good question. The definition in ISA 701 is quite specific.
Yeah.
They're defined as those matters that, and this is important, in the auditor's professional judgment,
Okay, judgment's key.
were of most significance in the audit of the financial statements for the current period.
The current year's financials.
Yes. And these are matters selected from those already communicated with those charged with governance.
Ah, so they've already been discussed with the board or the audit committee?
That's right. The people overseeing the company's financial reporting.
That phrase, professional judgment, really stands out. Like you said, it's not just ticking boxes, is it?
Not at all. It implies the auditor is bringing their experience, their expertise, their understanding of the business.
And the fact they're picked from discussions with leadership, that suggests these are pretty serious points, not just run-of-the-mill stuff.
Precisely. It's not some list they make up independently. It comes out of the deep dive of the audit work and those high-level discussions.
Okay, so how do they actually determine these? What's the process for singling them out?
Well, the standard gives a framework. Auditors start with all the things they've already flagged to the governance folks.
Right, that pool of discuss items.
Exactly. Then they focus in. They pay particular attention to areas assessed as having a higher risk of material misstatement.
So where things are more likely to be wrong, basically, could be errors or, well, fraud.
Potentially, yes. Places needing extra care. They also look at significant risks identified during the audit planning and execution.
Risks that needed special audit attention.
Yes. And then there are areas involving significant auditor judgments.
What does that mean in practice?
Think about things like complex accounting estimates, valuing goodwill, maybe, or provisioning for loan losses, where the auditor really had to dig into management's assumptions.
The tricky bits where there isn't always a single right number.
Exactly, those judgment calls. And finally, they consider the audit impact of significant events or transactions during the year.
Like a massive merger.
Yeah.
Or selling off a big chunk of the business.
Yeah, something out of the ordinary that significantly affects the financials and the audit approach.
So it's quite a layered process. Risk, judgment, big events.
It is, and it's crucial to grasp that this isn't just mechanical. The auditor has to really think. What was most critical? What demanded the most attention this year?
Okay, makes sense. So they've identified these key matters. What actually goes into the auditor's report for us to read?
Right. ISA 701 says each key audit matter gets its own description under a specific section.
A dedicated section.
Yes, clearly labeled Key Audit Matters. Makes it easy to find.
That helps. And what information is in there for each matter?
Two key things, really. First, why it was considered one of the most significant matters, what made it stand out in the audit.
The rationale.
Exactly. And second, how the auditor addressed that matter in the audit. What work do they actually do? What procedures?
So not just here's a problem, but here's how we tackled it.
Precisely. It gives context to the audit response. The standard actually points to paragraphs A31 to A59 for more sort of nitty-gritty detail on crafting these descriptions.
Good to know there's more detail if needed. That sounds much more useful than just a generic statement. But are there times when a key audit matter doesn't get communicated?
Yes, there are exceptions. The main one is pretty straightforward. If law or regulation forbids public disclosure of that specific thing.
Okay, legal constraints. Makes sense. Anything else?
There's another very rare circumstance. If the auditor believes the negative consequences of disclosing the matter would actually outweigh the public interest benefits.
Wow, that sounds like a high bar.
It is. The standard emphasizes extremely rare. You'd have to have very compelling reason, perhaps linked to severe market disruption or something, to withhold it on those grounds.
So generally, we should expect to see them. Now, what about interaction with the audit opinion itself? If the auditor gives, say, a qualified opinion.
Good question. If the issue causing the qualified or adverse opinion is also deemed a key audit matter.
Which it likely would be, I imagine.
Often, yes. Then it gets described in the Key Audit Matters section 2. They explain why it's significant for the audit and how it impacts the opinion.
Okay, so it's highlighted in both respects. But what if things are really bad? Like a disclaimer of opinion.
Ah, the disclaimer. If the situation is so pervasive, so uncertain, that the auditors simply cannot form an opinion on the financials overall.
They just can't say if they're fair or not.
Exactly. In that extreme case, ISA 701 says you don't communicate key audit matters.
Why not?
Because the disclaimer itself overshadows everything. Describing specific key matters wouldn't add value when the fundamental basis for an opinion is missing. The focus is entirely on why an opinion couldn't be formed.
Okay, that logic tracks.
Yeah.
So, assuming we do have key audit matters, where does that section sit in the report?
The placement is specific. If there's a modified opinion, qualified or adverse, or a section on material uncertainty related to going concern,
Yes.
then the Key Audit Matters section comes right after those. If it's a clean opinion, no major going concern issue highlighted, then it follows the main opinion paragraph.
So, its position reflects the overall audit outcome and the intro language. Does the standard say anything about how that section starts?
It does give guidance. The intro usually states that key audit matters are those judged most significant in the current audit.
Right.
And it importantly clarifies that communicating these matters is not a substitute for the disclosures management makes in the financial statements themselves.
That's a crucial point. This is the auditor's perspective on the audit, not a replacement for the company's own reporting.
Exactly. It's about the audit process and focus.
Let's get into the description itself. You said it covers why it was significant and how it was addressed. What kind of detail should we expect?
Well, the aim is for it to be specific and insightful. It might describe the nature of the risk or issue,
Okay.
perhaps reference related disclosures in the financials, outline the auditor's approach, the key procedures performed.
The actual work done.
Yes, and maybe highlight key observations or the outcome of those procedures. It needs to provide context. Paragraphs A32 to A45 give more pointers on this.
So it should give you, the reader, a real sense of what the issue was and what the auditor did about it, tailored to the company.
That's the goal. Understandable, specific to the circumstances, connecting back to why someone like the learner would find this valuable. Clear and accessible information.
You mentioned some potential examples earlier, like revenue recognition or inventory. Can we flesh those out a bit? What kind of things typically become key audit matters?
Sure. Areas of higher assessed risk of material misstatement are common candidates. So yes, complex revenue recognition is a classic.
Especially with tricky contracts or timing issues.
Exactly. Or valuing inventory, particularly if it's specialized or slow-moving. Financial instruments valuation is another frequent one.
Things involving significant judgment too, you said?
Definitely. Management estimates are often key audit matters. Think impairment testing of assets like goodwill.
Always a big judgment call there.
Or valuing complex provisions, like for litigation or warranties. The auditor has to really scrutinize the assumptions management used.
Makes sense. What else?
Significant transactions during the year, a major acquisition or disposal, like I mentioned. The accounting for those can be complex and have a huge impact.
Right.
Or even significant changes in the environment, like a major new accounting standard coming into effect that impacts the company significantly. Paragraphs A19 to A28 provide a bunch more illustrative examples.
So it often involves complexity, judgment, or significant change. But like you stressed, these are just examples.
Absolutely. What's key for one company might not be for another, even in the same industry. It's very specific to the audit.
Now, before these even get written up in the final report, there's that communication with the board or audit committee.
Yes, that's a crucial step. ISA 701 requires the auditor to communicate with those charged with governance about the matters they're considering, including as key audit matters.
So it's not a surprise for them when the report comes out.
It shouldn't be. It's meant to be a dialogue. The auditor discusses their preliminary views, why they think certain matters are significant.
And the board gets to chime in.
Yes, it's two-way. Those charged with governance can provide their perspectives, which might influence the auditor's final determination or how the matter is described. It fosters understanding.
That sounds like good governance practice, having that discussion. Okay, one last piece, documentation. I assume auditors have to keep records of this.
Oh, absolutely. Like any critical part of the audit, the standard requires auditors to document a few things specifically about key audit matters.
Such as?
Well, obviously, the matters that were identified as key audit matters, but also, importantly, the rationale for why they were considered the most significant.
A justification.
Yes. And documentation is also needed if a matter discussed with governance was ultimately not included as a key audit matter. The reasoning for that needs recording, too.
Okay, so documenting the ins and the outs.
Right. And finally, they need to document the communication about these matters with those charged with governance.
So the whole process is traceable in the audit file. Accountability, transparency.
Exactly. It underpins the whole process and ensures there's a record of the judgments made.
Right. Well, the learner, that was quite the deep dive into ISA 701 and Key Audit Matters. I think the main takeaway
Is that this part of the auditor's report gives you a really valuable insight.
Yeah, a window into what the auditor saw as the most critical, most challenging aspects of their work on that specific company for that year.
And understanding these key matters helps you build a more sort of rounded picture of the company's situation and the audit itself. It makes the report more relevant.
More transparent, more useful for you.
That's the aim.
So here's something to chew on. How might knowing what kept the auditors particularly busy, those key audit matters, actually change how you read and interpret a company's financial health?
Yeah, what further questions does it spark for you about how audits work and what gets reported?
It's definitely food for thought. Hopefully this dive gave you a solid grasp of what ISA 701 is all about.